Good morning, retail traders. Welcome to what? Today is Wednesday the 6/14/2023. I want to bring you the four tickers of the indices today and talk about a subject which everybody's talking about. The S&P 500 starts in a new bull market. So that's what they say. I've been trading this market bullish since last September. They're about 9 months behind. So what I'm saying now is that I'd be cautiously optimistic in the market. I was very optimistic 9 months ago when we were at the bottom, and I'll show you why. I did even a video on this. Let's get to a different ticker here, a different chart. This is AI. I'm waiting for the pullback, and it almost hit my support. We got a double bottom, high or low right now. But for example, on a SPY, we'll pull up the yearly chart, clean this all up. I was I was bullish when we created this snake down here. We had a double bottom snake. This was back in September, and I was calling this trade out, and I also did a song about the reversal in the market. So this is when I became bullish, and that was back here at the double bottom. Now they're just now starting to be bullish here at a double top. Personally, I'd rather trade it here and run it all the way up and be a bull. I've been a bull all year long. Anybody that's followed me in the room and how I talk about stocks. So we had the snake break out, pull back, and then the boom. And when we had another one, snake break out, pull back, and boom. So we're up here at at a double top breakout. And I did this in a video there just a few days back. And so we're going to look at the 3-year. Now the 3-year puts us in a whole new different realm, and we can able to go to the 3-year and try to find some kind of resistance where I think it would be a good pullback, and that's going to be right here close to this here head and shoulders. Now I'm a chartist artist. I like to trade through chart patterns, moving averages, and being in the now. Back here in September, I was in the now off the 200 SMA on the weekly time frame, and I called this out. I said we had 3 black crows on the week, and then we had this long leg doji and a hammer, or a spinning top, and it was all off the 200, and then we ended it up with a hammer at the end of that run. So that was off the 200, and that's when I called the trade out, so that we were going to reverse back up to a double top on the yearly. So now we broke this resistance right here. This is a major triple bottom resistance right here, and we hit it once, and we hit it again for the double top. So the next resistance is going to be right up here, and this is going to be the shoulder. You got a right and you got a left shoulder. So this is going to be the very hard resistance where I think I'm going to call the reversal in the market to the downside, back to support, which was the double-year high. So we're going to put a trend line, a price line, across that shoulder line right there. Left shoulder, right shoulder, and the head. We'll be lucky to touch it if we touch it at all. So this resistance level right under the shoulder is where our target is at 448.79. No higher. I'm going to get out of that trade, and the pullback is going to be back here to the double top. The double top on the yearly high. If that doesn't hold, then we take it back to the low possible support at 417 to get back into the market, because what we have here is an ascending triangle, and what we have here is a head and shoulders. So there's the head, and there's the right shoulder and the left shoulder. And when we hit that shoulder, we pulled back. We hit that shoulder, we pulled back. Now we broke out. So we got to move it up to the next shoulder, and that's the S&P. So be cautiously optimistic from here on out. I was very bullish down here off the 200-day moving average on the weekly time frame. So let's go ahead and go to the IWM. Now, this is my opinion, and my opinion only. I think there's not going to be There's going to be a pause, and it's going to help the bank sector out. So we've got a resistance here on the IWM. And I'm going to draw that trend line from the body of that candle to the body of that one and extend it out to the right. And that's going to be our hard resistance to get out during the heat of the trade. It's just right under 195. So keep that in mind. Your first resistance to break is going to be right here at 191.50. $191.50 is your hard resistance, and if that breaks, you'll have the triple top resistance on the weekly time frame. The QQQ, same thing, called the trade off the 200 SMA. We had a higher low, we had a snake breakout, pull back to the 200 and a boom. Now we're at resistance level on this one right here for right now. At that price level is right at 363.33. So this is your neckline. Now this is something that I want to explain to you. A head and shoulders does not always have to have the shoulder line to be equal to its other counterpart. You know how shoulders work. We lean, right? So we take this here high from that right there and move it to right there to the body of that candle, and then we extend that out to the right, and that right brings it right to the bottom of that solid resistance that I was calling out earlier, or support level that I was calling out earlier off this other head and shoulders. You know, I take that back. This shoulder comes on down and pulls right back down to here. So this sucker could fall all the way back down to that shoulder line if it had to, if it was in bad shape. Right now we broke that shoulder. And we hit this double top, where we hit this shoulder. I got this all wrong. Let's try this again. Let's try this again. This is the head. This is the left shoulder and the right shoulder. We are now at the right shoulder of this here head and shoulders, which means that's a resistance, and it can pull back to the 9 and bounce off the 9, which is the third support here at 339.65, which is the continuation of this inverse head and shoulders. So let's see if it does not break the 363.33 today. If it does break it, we'll be able to complete the head and shoulder up here, and I'm going to draw a price line on that at 383.93. And then the last one is the SPX. This is the only one that I trade in same day expiration, and we've been doing very, 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 very well with it. I also called this one down in September off the 200 SMA on the weekly time frame. We had a snake breakout, pull back, and now we've had the boom, and we broke resistance right here at, let me clean this up. We broke resistance right here. That's where I'm going to put that price line. So that old resistance will now become support, and if that doesn't hold, this is your lowest possible support in the trade, and that bounces up off this here ascending triangle that we have right here. That's an ascending triangle. So we broke out of resistance, and we've up here at this next resistance level, and we broke that, and the next one up, no higher, and that's going to be again the shoulder line of the head and shoulders. So we're going to draw a price line all the way across that shoulder line, that shoulder blade, and that's going to be 55.33.95. No higher than that. And then I'm going to be optimistic that we are going to pull back some. Cautiously optimistic is what I'm saying, trying to get out. So that's it, retail traders. Have a great day. This is a sneaky snake trading strategy. Subscribe and ring that bell. And I believe that the woke, I did a video on the woke. So if you want to go back in my library and look at that woke video, you might pick something up off it too. Have a great day, retail traders.